Hey everybody, this is Osprey from mychartcoach.com. In this video, we're going to take a look at the energy sector here and the small cap energy sector stocks that are currently running. They've been going down the line and just running them pretty hard. And so yeah, there's been some nice plays. We've been seeing them set up before they run, so that's been cool to see them follow through. If you look here at ticker symbol XLE here, this is the energy select sector. This is following the energy sector here, and as you can see, it's been basically in the sideways channel. So you've got the support here and resistance, and so it's in the channel right now. It needs to stay above the middle Bollinger Band. It got back above the middle Bollinger Band in the 50-day simple moving average today, the green and dotted purple lines here. And so if it could stay above both levels, it could get a new uptrend going. What it needs to do is break this closing price on the 11th. If it can push up through the 77 level, it could possibly get a run back up here to that recent high close up here at the what is this, the 21st closing price at right around 78.50. Now if it were to drop back below that 50-day simple moving average currently at 75.04, if it drops below 75, that's going to be a red flag signaling more consolidation. It did have that upper wick on today's candle, so there was some sell-off, but it did close above that middle Bollinger Band. Take a look at USO here. This has been a big winner. Call options returned some nice gains again today. So congrats everybody. It made that nice gap fill yesterday. There was a gap between low of day on this candle and high of day on this candle, and yesterday's candle filled the gap. And then today it was able to gap up open and push higher. There's a gap between high of day yesterday and low of day today, and so on a pullback, you'd be looking for that gap to fill. A drop down to what is that 1430 would fill the gap. Right now it's hitting the closing price in the 21st resistance level. Notice how it was above that level intraday, but they pulled it back right to that level. That's the algorithms, that's the machines hard at work there, making sure that it did not break that resistance level. So going forward, it has to trade above this 1466 level, 1466, 1467. If you see it trading USO above 1470, that would be bullish. If it stalls out here in this 1470 resistance zone, it could get some consolidation going. Today's candle did form well above that upper Bollinger Band. The Bollinger Band's down here. The upper Bollinger Band's down here at 1428, so the candles could work back into the bands. Okay, look at UWT here. This is the 3 times long crude, and this has been, it has the same pretty much pattern as USO, very similar. It did not fill the gap yesterday, though. There was a gap between low of day on this candle and high of day on this candle, and you can see yesterday's candle did not quite hit that top of the gap level. Today there was a gap up open, so now there's a gap, a new gap between low of day today and high of day yesterday. So a drop down to 37.50, about that level, would fill the gap. Today's candle is floating above the upper Bollinger Band. Many times when that happens, the candles do work back into the band, so you have to be ready for that. And that would put EMA4 at 36.76 as the key level to hold on a pullback. Right now, it has to break that closing price in the 21st and the 41.50 resistance zone. You can see the upper wick on today's candle hit that level and pull back, and so it's going to be the big level to break going forward. Okay, look at PED here. Big winner, closed up 621%, and it wasn't like this just gapped up open and then ended up pushing higher. This was a very strong move today. I mean, as you can see here, it's started the day way down here at 40 cents and closed the day at 225. I mean, it doesn't get any better than that. Look at that big white candle. This is a giant flagpole, so we'll see if the candles work back into the bands or if it can keep pushing higher. If they do work back into the bands, EMA4 down here at 109 is the key level to hold. Notice that giant volume spike today. This is just a huge push. Check out the 15-minute chart here. So what has to happen is it has to keep making new highs. And so, it was able to break out above this high close at 1 o'clock, and that signaled more upside. And then you had the high close here at 1:15, and then at 1 or 2:30 here, it stalled out. And so it's going to be all about breaking this 230 high close. In order for a stock to keep heading higher, it just has to keep making new high closes. Once it stops, like it did right here, this is a red flag. Notice how all these upper wicks are hitting that level, and now it's starting to pull back. That was the algorithms not letting it can't break 250. And so going forward above 250 signals upside potential. Fail to break that level would signal possible consolidation. If it drops below that middle Bollinger Band at 203, that's how you'll know that it's likely going to pull back. The downside risk on a stock that runs this hard is it works its way all the way back down to the 50 simple moving average, and that's down at 110. That would be a 50% plus haircut from the current level. If you look here at the weekly chart for PED, you can see all the move was today for the whole week, basically. I mean, it's up, what is it up? 621%. So it's just the bottom line is this was a huge move today. Look at the weekly candle. I mean, this is wiping out all the losses from 2017 and 2018. Look how tight the Bollinger Bands were down here. Those tight Bollinger Bands, when you have the upper Bollinger Bands, this purple line, and the lower Bollinger Bands, this purple line, when they get tight like that, it signals a move could be coming. And when you get a breakout above, that signals upside potential. It broke above that 50-week moving average. You can see that was the big level back in 2016 that it failed to get above, and it pulled back. And then it's also now above the 100-week moving average at 84. If it could close above both of those levels for the week, that would be incredibly bullish. As you can see back up here, you have to go off of this chart, way back to find a close above the 50 and above the 100-week moving average, the gold line. And so right now what happened is it came up and it hit the 200-week moving average, the red line. And so it hit that level and pulled back. If it fails to break 275, that's going to signal a temporary top. And then once again, you have the candle working well above the upper Bollinger Band, and the risk is the candles work back into the bands, and the first support level for these moving averages is going to be EMA 4 at 109. Okay, let's take a look at YUMA here. Nice move, closed up 86% today. This was percolating, and then it finally broke out. I did post a chart when it was heating up back here, and then it went sideways. You can see it had this big sideways channel, and then today there was a breakout above the channel. This was the chart posted during the trading day when it was breaking out above the top of this channel here, and then it ended up, when it gets above the channel, that you had this gap over here between low of day on this candle and high of day on this candle, and so it was the trying to see if it could come up here and test this bottom of the gap level, and it actually busted through that intraday, and it actually got to the next level, which was the 50-day simple moving average. It busted through both key resistance levels that we were looking at for possibly tomorrow during the trading day today in the last hour of the day. So that was super impressive. Now it has to stay above that 50-day simple moving average at 67. If it can hold that level, the next target's going to be the 100-day simple moving average at 89. A run up here to almost 110, that red line right there, the broken red line, that would fill the gap. And then 200-day simple moving average is at 102. Basically, if it holds this 50-day simple moving average, it might be able to work its way back up to dollar line. Now, if it were to pull back below that 50-day simple moving average, that would be a signal that it's possibly consolidating. And what you want to see is that bottom of the gap level turn into support. If you look at the YUMA 15-minute chart, you can see it really got cooked in the last 2 hours of the day. It came, it had the nice spike in the morning, and then they pulled it back. It bounced right off the middle Bollinger Band like a champ, and then it just formed white candles all the way into the close. It really got pushing. Look at that huge volume that came in at 3:30 today. And so, so basically, with the candles pushing like this, you want to see EMA 4 at 60 hold. If it dropped below, that would be a bearish change in trend from what was happening earlier in the day. As you can see, when it got below EMA 4 here, it consolidated. So you want to see that level hold tomorrow. Okay, check out CEI here, closed up 77%. Yeah, this is heating up as well. With RSI at 63 and Fasto at 66, there's still room to run for this stock. We had, this was in last night's video, and I showed how it was failing to get above the middle Bollinger Band. You can see all these candles, and then yesterday's candle, broke the dotted purple line, which is also the 50 or 20-day simple moving average intraday, and it keeps on having a hard time, closing above that level and turning it into support. It closed right at that level back here on the 13th, and so today it broke above that level intraday, and it was able to stay above, and so we were shooting for a possible run up to that 50-day simple moving average, and it happened intraday, and so now we want to see that level hold. If that green line can hold at 40, that's going to signal upside potential, and so now look at the big volume spike behind the move. And so I'll show you this daily chart. We'll show you the key levels to break going forward. You can see the upper wick hit this April support level, and what was once support turns into resistance. So it's going to have to break through the 60 to 70 60 resistance zone from April. And if it could do that, then you have this March support levels, about 75 as the big level to break. If you can get through the 60 to 70 to 75 zone, these three big levels, then you'd be looking for a move up to dollar land and testing that 100-day simple moving average at 99. Now once again, you can see, look at how there hasn't been a close above that 50-day simple moving average forever. It tried to break that level back in February and it failed to do so. This was the first close above the 50-day simple moving average for 2018. And so this is a really strong bullish change in trend, and it was on huge volume. So we'll be looking for that level to hold and for follow through. If it were to drop below 40, that would signal consolidation, and then you'd likely see that middle Bollinger Band at 30 tested. It has to hold that middle Bollinger Band to keep the new uptrend going. Okay, take a look at HUSA here, closed up 33%. Really big move. It's above the 50 and 100-day simple moving averages. It's hitting that 200-day simple moving average right now. You can see here that the 100-day simple moving average had been major resistance, and so the break above that level, the close above that level today, is a bullish change in trend. It hadn't closed above that level since way back somewhere. You have to go way off this chart, and so now it's hitting the 200-day simple moving average. If you could see a break above 33 tomorrow, look for a possible run up to the 300-day simple moving average up here at 40 cents. Now, if it failed to break that level and the candles work back in the bands, you want to see that 100-day simple moving average at 27 turn into support. You want to see that level hold, and then the candles start this new uptrend. Once again, giant volume spike. Okay, so take a look at DO here, Diamond Offshore Drilling. This is a big move for this stock here. Call options were on fire today with this 10% gain. I mean, as you can see here, it broke above this, this multiple top resistance zone. So it came down, formed, kind of like a W type of reversal pattern, and then it came back up, and it filled the jar here, and it's been working on this sideways pattern. And so today the big move was it finally broke out above resistance. It broke out, it closed for its highest close for the 2018, and so that close above resistance here, above the $20 resistance zone, is signaling more upside potential. So now, as long as it stays above 20, it should continue pushing higher. You want to see it ride EMA 4 at 1983 support. Notice there was a nice volume spike. So in order to head higher, and what happens is when the stock's breaking out on the daily chart like that, we look at the weekly chart to find the next resistance levels. And right now, it's hitting a major resistance level. It's hitting the 200-week moving average at 21.26. So if it can close above that level for the week, keep in mind this candle will not set until the closing bell on Friday, then that should signal that it wants to head higher. There hasn't been a close above the 200-week moving average in years. This is a huge level. If it fails to break, it could possibly consolidate. Okay, take a look at SAEX. I'm going to show you a few charts that are setting up now. Keep an eye on this one. It's thinly traded right now, with but volume could come in. That's what's been happening with these plays. So we'll see what happens. It closed today above the 50 and 100-day simple moving averages at 149 and 151. It tried to break that level in earlier June, and it failed to. It got above that level back in May, and it failed to hold and pulled back. It failed to hold the 100-day simple moving average, the gold line. Notice how many wicks hit this level and failed to break. And so basically, if it could stay above 151, look for a run up to the 200-day simple moving average at 182. Last time it hit that level, it failed to break, and that was the lock and gain zone. That's the same thing. If it hits that level, fails to break, that would be a signal it could consolidate. If it closes above, then it could head higher. So keep an eye on TGC here. Closed up 17% today. It had this nasty long upper wick. It hit 92 and pulled back. It did close above all the moving averages. The moving averages are all converged here between the 50, 100, 200, and 300-day simple moving average. You have the 20-day simple moving average down here, and EMAs 4, 8, and 13. It's currently closed above all of the moving averages that we track. And so as long as it stays above the top moving average, which is currently the 50-day simple moving average at 71, it should push higher. And so what it needs to do now is work on high close horizontal resistance. So when you're drawing your high close resistance levels, it's always good to draw them across the top of the highest close on the white candle. As you can see here, this was the recent high close. I go by the months, and then you can see here this was going to be a tough top. All right, and so if it can break above this level and get above this 81.50 to 82 level, that should signal it wants to head higher. And now, if it drops back below that 50-day simple moving average, that'll signal consolidation. Okay, keep an eye on REXXQ. This used to be REXX. It got demoted to the OTC. It's been nothing but pain and suffering for anybody that's been holding. But you know, better times could be on the horizon here. As you can see, back in the day, it was trading up here near $1, and then it dropped all the way down to 10 cents. I mean, it got as low as below 7.5 down here. It's channeled out after the big drop. It's been holding support on very light volume. As you can see, the super tight channel. You know, I go by the bottom of the red candle for the close. And so that's I go by closes, and so the closing prices on the candles. And so this is the support level. You know, this was the resistance level, and then today there was the breakout higher. So it broke out above the channel. It also closed above the dotted purple line. That's the middle Bollinger Band, currently at 12 cents. It had not closed above that level since back here the day before the drop. And so this is the first close above the middle Bollinger Band since this huge pullback from way up here, you know, around 80 cents all the way down to 7 cents. So, you know, it lost 90% of its value, and now it's rebounding. And so basically for the strategy, if it stays above 12 cents, it's in play. If it drops below that middle Bollinger Band, that'll be the sell signal. It has to bust through the upper Bollinger Band at 16.5. If it gets above that 16.5 level, it could get pushing. You're going to have a high close right here to break. That's going to be a tough level. And so if it can get above this 25 level, then you have the 50-day simple moving average way up here at 42. You know, there's going to be some resistance here as well. That's what it's hitting right now, this upper Bollinger Band. If it can get through this zone, you know, 25, then possibly 42. You never know. The way they're pushing them, they could get it running if everybody jumps in. Okay, let's look at SDRL here. Another one to keep an eye on. Closed up 11%. So it retraced from way up here at 74 cents. You know, it broke down. It came all the way down to the bottom moving averages down here at the 100 and 200-day simple moving averages. So it's bouncing off of 30. And so it has to hold 30 to remain in play. If it dropped below 30, that would be a major red flag signaling huge downside risk. Right now, this is where you look to low to play the bounce. You know, it really for us, it's only in play if it stays above this pink line. That's EMA 4 at 34. So it's a tight stop on this one. If it were to close below that level, it'd be a risk to hold. It did close above that 300-day simple moving average at 35. If it can hold that level, you know, it's got a little work to do. There's EMA 8 and 13 and the 50-day simple moving average all lined up right here. If it can get above 37, then it could get moving. So keep an eye on it tomorrow for a break above 37. And then the big thing is going to be getting above that middle Bollinger Band at 41 to get a new uptrend going. So keep an eye on it. It's had a big pullback. All the energy stocks are you know, a lot of these penny stocks are running. And so what happens is a lot of times is they go down the line and they run the next one. And so, yeah, I didn't mean to have this on here, but I'll show it to you anyways. This is ticker symbol NAK. I was just trying to do energy stocks in this video. We're also following the miners as well. We have quite a few mining stocks heating up, and NAK is one here, NAK. And yeah, what's going on here is it got above the middle Bollinger Band a couple days ago. Sometimes it takes a little time to set up. I think I said that in the last video. It just, you know, when they get above a key level, notice how there hadn't been a close above this middle Bollinger Band since back here on April the 24th. And so the close above that level for the first time is a signal of a bullish change in trend, but it has to confirm that level of support. So going forward, if it can stay above 537, that's going to signal that it's in play. You know, it has to just hold this level. And then if it can, then it could possibly get a new uptrend going. You know, it still has this gap up here that's unfilled. There's a gap between low of day on this candle and high of day on this candle. You can see that the top of this candle almost, this wick almost filled the gap, but not quite. And so, you know, a run up to the 50-day simple moving average at 69 would fill the gap. Okay, thanks for doing this video. Please come check out the chat. You can come in and check it out for a free trial. I'd really appreciate that. Thank you.